Hello, everybody.
You got an echo.
I know.
Good morning.
Good morning.
Hi, Lisa.
How are you?
I'm good. How are you?
Good, thank you. Does audio sound okay? Do I have an echo as well?
No, Liz and I are offices right next to each other. I wonder if that's why we have an echo.
That might be.
Could be.
I'd turn it down a little bit and see if that helps. Oh.
Did the echo go away?
It's not as bad.
Good morning.
Good morning.
Morning.
Hope everyone's doing well today.
Yep.
How are you doing?
Doing good, thank you.
Good.
Excited to hear this valuable information that everybody's about to share with us.
It's going to be good.
Can you guys hear me okay?
Yes.
Great. Hey, Miguel, do we have all of our panelists here?
Let me double check. We have Albert, we have Jaisa, we have Jim, we have Arlene, and
Elizabeth and Albert. Yeah, we have them all.
yeah, we have them all.
Is Sergio on also already?
Yes,
Let me
it's
give it a couple minutes.
SCINA.
Okay. Perfect.
There's proof.
Hi, everybody.
Hi.
Thank you so much for joining us today. Welcome to the Greater El Paso CCIM's Zoom discussion on commercial real estate financing in the time of COVID-19. I am Memo Sotomayor, CCIM, your chapter president for 2020. I want to thank our strong committee and board of directors support for putting this together, led by Jeanette Kuhn from Prosperous Title. Thank you guys so much for all the work that you put into this, and also to you, Miguel, for helping us with everything. I'd also like to thank today's sponsor, Border CIE. Sergio Pinajero will be speaking to us about a lot of the value that Border CIE has to offer for us brokers and appraisers. For those that don't know, Border CIE is our relatively new and very good local listing service for commercial real estate. So thank you to Sergio and the board of Border CIE for their support today. Also want to thank all of you for joining us, and we hope that the information covered today will assist you in fulfilling your clients' needs in these unprecedented market conditions. For those of you that were not able to join us for our last Zoom meeting, we discussed the economic and market conditions of the country and also of the local market. Looking forward also to the driving forces that will reshape the commercial real estate industry in the wake of the pandemic. It was a great discussion led by Dr. Ted Jones from Stewart Title. And if you missed that discussion and are interested in some of his insights into the local economy, please reach out to myself or Miguel Fraga by emailing elpasoccim@gmail.com, and we'll gladly send you a copy of the recorded Zoom meeting. We're really excited for today's topic, which will center around the changing lending market. As we have all seen, the pandemic has been incredibly impactful on our businesses and our tenants, and we hope that the insights shared by this great panel today will further enable you all to fulfill your clients' needs and better serve them as they adjust to today's reality, while also preparing for the future that awaits us all. I want to give a special thank you to our panelists for making time for us today. Your expertise and knowledge is an invaluable asset to us as commercial real estate professionals, and specifically to us as a chapter. We thank you for your dedication in the wake of the pandemic, and I'm really looking forward to hearing how your institutions are adjusting to continue to provide the great service and products that have made you all leaders in our market. So thank you for your support of the Greater El Paso CCIM chapter. And before we dive into the discussion panel, we do have a few announcements. First, I'd like to call on Elizabeth Pulido, CCIM, our past president and scholarship subcommittee chairwoman, to tell us a little bit about how we're adjusting with our scholarship applications and deadlines and requirements to try to stay as flexible as we can and to meet the needs of our students, scholarship recipients. So, Elizabeth, are you there?
Yes, I'm here. Hi, everybody. Thank you for the opportunity, President Memo Sotomayor, for giving us the opportunity to share information about our scholarships. So, while it has been a challenging time with the pandemic and whatnot, and classes have been, in-person classes have been postponed, there are still many CCIM online classes that you can take towards your CCIM designation or in general. And, we have two scholarships. Our local chapter scholarship, the first deadline has passed, but we do have a second scholarship that is open right now for people wanting to apply for the scholarships. The second submission period is for applicants to give us their submissions by August 31st. I think at this time we're being a little flexible on those deadlines. So I just would like, and then the other one is the Reuben Schaefer Senior Scholarship. That is a $1,000 endowment scholarship, and that deadline has also been extended. And then next year, our chapter approved an additional endowment scholarship, the Carlene Barth CCIM National Endowment Scholarship for 2021, where we will have an additional $1,000 available for you all to apply for starting next year. So the board is still very active in supporting your scholarship, your education aspirations to get your CCIM, and we're very much on board in regards to funding scholarships. Just very briefly, I was hoping Miguel could show everyone how to get to the scholarship applications. Do you think you could show us, Miguel, real quick, how to get to the?
Yes, absolutely. So I'm gonna start sharing my screen.
This is via our website. So hopefully you all have visited our website, but this is our new website.
Yes, can you all see my screen? I'm sharing the website for elpasoccim.org.
Yes.
Perfect. So once you go to your web browser, you just go elpasoccm.org, and it's a very friendly user-friendly website. So you can have all the options here. So when you're looking for the scholarships, you would go here to education, you hover over it, and then there's the scholarships opportunities here. And then you will have right to the right, a list of all the scholarships right now that Elizabeth just talked about. For example, the Reuben Schaefer endowment. You will click on it, and then it will give you all the information about the scholarship, the guidelines, the selection criteria, the deadline, and of course, the last thing is download the application. And once you click the button, you should have the application that you can submit with all the guidelines and all the instructions on how to submit it. So you just download and send it to, and follow all the instructions here. Same thing for the other local scholarships. You go to education, scholarships, and then click here on local scholarships, and it will direct you right to the scholarship application form that you can easily fill out and send it as per the instructions.
Thank you, Miguel. Great job. We've worked really hard on our website, and we hope that you all will utilize it for many purposes, and especially for scholarships. Thank you, President.
Awesome. Thank you, Elizabeth. Thank you, Miguel. Great walkthrough through that website. As you guys can see, it's pretty lean. So there's not a lot of, you don't have to click through a bunch of things in order to hopefully get to the information that you're looking for on the new website. So, and also we look for feedback. So if there's any suggestions for improvements on the website or anything, please email us at elpasocCIM@gmail.com, and we'd be happy to take your feedback and considerations into account when revising the website. So thank you both for that. We're giving money away, guys, so I really encourage everybody to download those applications and submit them. It's free money. No better time to better prepare yourself and educate yourselves for the needs of your clients, and we're here to support you in every way that we can. So thank you, Elizabeth. Thank you, Miguel. Next, I wanted to just encourage everybody to make sure that you've been able to renew your membership for 2020, which can also be done on the website. If you have any troubles navigating that, please reach out to us. Happy to help you do it manually. We can email you the membership form or anything if you have trouble with the website. But we are lacking some renewals from last year, so we know that there's members out there that have benefited from membership in years past. And obviously for an organization that is so heavily dependent on being able to network and socialize and have in-person meetings, this pandemic has been incredibly hard for us to continue to find ways to add value for you guys. And so we're lucky that the Institute on the national level has done a really great job of converting everything to mostly online platforms. So hopefully it's still accessible to you guys and you can continue to improve your knowledge base. But we're here to help, and we're also seeking for referrals for new members. So if any of you that are members and have benefited from membership can think of other people in the industry that might benefit from being part of the organization, please let us know. Direct them to the website. elpasocCIM.org again is the website to become members today, or send me a message below. I mean, you guys could message myself or El Paso CCIM, the host of this meeting, and just send us a message with a couple of names. We'd love to reach out to them and talk to them about the membership benefits of our chapter and see if they'd be interested in joining. So really looking for the community to support the chapter in these difficult times so that we can continue to do the good work of the Institute here locally. Next, I'd like to invite Sergio Tinajero from Border CIE to tell us a little bit about the listing platform. And again, thank you so much for your sponsorship today, Sergio.
Well, no, thank you. The board is compromised with Jim Payne. He's on the panel right now. He's Aníbal Olay. He's the vice president. I am the president of the board. Kim, also Reagan, she's on the board. Plus Victoria and the Mike McCabe, the guys from the local board. What is it? The board of realtors. What we're trying to do is let me just share my screen here. The screen. Just give me 1 second. Okay, share. So we have, I don't know if I can see what I'm sharing, so you guys can see that. The map, commercial exchange. Did I lose?
Yes,
I lost.
yes, we can see it, Sergio.
Okay, never mind.
You.
Okay, I thought I lost audio. Well, this is Border CIE. When you log into Border CIE, this is our local commercial MLS system that we've been trying to grow. We have several subscriptions. We have almost 520 properties on the Border CIE, and we're trying to get more people to join so we can make this grow. Eventually, when we make this grow, I mean, our costs are going to be reduced. Right now, we're about $75 per month, which is a lot cheaper than any other commercial MLS system. I mean, LoopNet, we're paying above $1,000, $2,000, $3,000 some companies. Then if you add the Catalyst, not Catalyst, I'm sorry, the Prexy is about $300 per month. But Border CIE is only $75 a month. You can just search properties individually. You can you can do it by property. You can do it by the map, just like any other listing service. And this is it's just one fee for all the properties. So we don't have up to 20, 50. This is whatever properties you have, they're going to be listed here. Also, part of the border CIE, it's a commercial exchange. We're part of commercial exchange. With commercial exchange, we can broadcast our listings nationwide. All these dots, this is where you can see properties, and I'm just going to zoom into El Paso, because we have several properties, and you guys should take advantage of these services. Again, for $75 a month, it's not bad. I mean, the colors that tell you the different type of properties that you can, whether it's an office or land or retail. And this is a very good tool. There's a lot of areas in New Mexico that don't use LoopNet or CoStar. I've been searching properties in the Santa Fe area and Albuquerque, and you can see everything. It's for them, it's free as part of the board, the MLS fees. So this is a very good site, and then the Border CIE, we're trying to make this grow and give more tools. So if you have a chance, go ahead and log in and just take a look at it. It's bordercie.com, and you'll get. I mean, there's a lot of properties there that way you can see. And again, it's not an expensive monthly fee. It's very affordable, and there's a ton of properties that you can search. Okay, I think that will do it.
Awesome, Sergio. Yeah, for anybody that hasn't been able to be on it, I highly recommend joining. And obviously, the more of us that join, the more the value is. And like Sergio said, the cost will actually eventually go down as we get a little bit more buy-in into the system. So strongly encourage everybody to reach out to the Board of Realtors and to get signed up for Border CIE. And again, Sergio and your board of directors for Border CIE, thank you guys so much for your support today.
No, thank you.
Next, I'd like to jump over and introduce our panelists. So what I'm going to do is I'll introduce a panelist, and then they'll have a few minutes to tell us about themselves and their institutions that they work for. And once we get to those introductions, then we'll get to some of the questions that we have for you guys. So first up, I'd like to introduce, again, Elizabeth Pulido, CCIM. She has over 25 years of commercial lending experience and is currently Vice President of Coastal States Bank, a national preferred SBA lender. Elizabeth Pulido, CCIM, is a native El Pasoan, earned her bachelor's with a double degree in finance and marketing from UTEP, and is a graduate of the National Commercial Lending School from the University of Oklahoma. As a result, she has a strong financial background and understanding of a client's business and operational needs. She's won multiple awards over the years in the SBA market. And she's been instrumental in earning the status of the #1 SBA lender for various lenders over the years for the El Paso district. Elizabeth was a graduate of Leadership El Paso Class 17 and has previously served as a state board member for the Texas Tomorrow Fund, the Revolving Loan Fund, the Child Crisis Center, and Community Partners of El Paso. Elizabeth previously lectured for the UTEP Small Business Executive Education Program and has been a past panel speaker for the UTEP Franchise Center, and has also enjoyed speaking at the Women in Business Conference and various SBA seminars about financing. Welcome, Elizabeth. Thank you for joining us today.
Thank you, guys. Thank you, Memo. Thank you, Prez. Just very briefly, I'll just let you all know that I work for Coastal States Bank, as Memo explained, and our specialty is financing owner-occupied real estate for users. 1% or greater is the percentage of occupancy that the owners are supposed to occupy. We are able to fund a turnkey financing where if the property has to be retrofitted, we can include construction monies in there to ready the property for the business, equipment money, and whatnot. So whatever the total project cost is, our down payment for the customer, it can be 10% and sometimes even less than 10%, just depends on the circumstances. Under the SBA program, we're able to fund the total project cost over a period of 25 years for real estate, when real estate is a component of the total project cost. And there's no balloon payments. And right now, for customers that close loans before September 27th, the SBA under the CARES Act, subject to funds availability, will make the payment for the customers for the following 6 months. So that's basically my program in a nutshell. We also fund non-real estate loans for business acquisitions, for partner buyouts, for debt refinance as well. Okay, thank you, Memo.
Thank you, Elizabeth. Next, I'll be introducing Mr. Jim Easley. He's a Senior Vice President and Market President for Citizens Bank. Mr. Easley has an MBA from UTEP, has been in banking for over 4 decades, and a Rotarian and board member of the Rotary Club of West El Paso, and he's also a member of CCIM, GEPAR, Association of Builders, Central Business Association, Hispanic Chamber, and Great Chamber, and also consider him a friend. Mr. Easley, thank you for joining us today.
Thank you, Memo. I appreciate it very much, and I appreciate being able to be on the panel today. As mentioned, I'm part of Citizens Bank, and Citizens Bank is headquartered out of Las Cruces. A little bit of background on Citizens Bank. It was started in April of 1970. So this year it's celebrating its 50th anniversary. And it's headquartered in Las Cruces. In Las Cruces, it has 5 branches. There's a branch in Truth or Consequences, and then the El Paso branch. We provide all types of banking services to include commercial banking, consumer banking, and then we also have residential mortgage lending. So we have all of that at our branch in El Paso. We have myself focused on the commercial lending. Mary Jaime is our branch manager. And then we have Gabe Garcia as our residential mortgage lender at the El Paso branch. And by the way, our branch is located at 2500 North Mesa. So it's very convenient located in El Paso. From a standpoint of our size, Citizens Bank overall is about a little over 700 million in size. Right now, our loans total a little over 500 million, and deposits are about 530 million. So it's locally owned, locally operated. All decisions are locally made within the bank for commercial, residential, and our consumer lending. So we're proud to be able to say that we're locally owned, locally operated. For the El Paso branch, we've been here since September of 2016. We started out as a loan production office, and then in October 18, we became a full service branch. We have all the accounts that I mentioned, from a commercial, consumer. We have 2 drive-up lanes, full ATM. And so look forward to getting back to where we can have our lobbies open. We are still closed and will be for some time until things are able to get back to where we can open our lobbies. I just want to mention real quick, a big loan product that has been out there for some time since the pandemic crisis started is the PPP loans. And we're proud as a bank to say that we did over 925 PPP loans for close to 77 million. That's the whole bank. And in El Paso, we did over 100 PPP loans, and our totals are over 8 million. So glad to be able to help out the local businesses, both in El Paso and Las Cruces, with the PPP loan program. It's been a big help for businesses in both communities and throughout the nation. So appreciate again being able to visit and let you know a little bit about Citizens Bank. Thank you.
Thank you, Jim. Thanks for making some time for us today. Really appreciate your insight and your local expertise here, sir.
Thank
Next,
you.
we'll be introducing Arlene Carroll, Senior Vice President at Westar Commercial Lending. Arlene entered the banking industry upon graduating from Austin High School, beginning as a teller at First State Bank. While working full-time, married, and taking care of her terminally ill mother, she graduated from the UTEP with a bachelor's in finance in '87, and then entered into the credit analyst training program at Texas Commerce Bank, which is now Chase Bank. She was promoted to Assistant Vice President working in the Professional Executive Lending area. In '94, was promoted to VP in Commercial Lending Division at SunWest Bank, which later became absorbed into Bank of America. And in '96, she moved to Albuquerque as Vice President of Commercial Lending for Norwest/Wells Fargo. With a desire to move back home and be part of the expansion and growth in the El Paso community, she transferred to the Business Banking Division of Wells Fargo in El Paso in 2002. And in 2004, she accepted a position as the first Vice President of Commercial Lending of the International Bank, now Vantage Bank. As of April of 2011, she accepted a position as First Vice President of Commercial Lending with Westar Bank and was subsequently promoted to Senior Vice President in 2013. member of Leadership El Paso Class 28, Director at Large, and incoming President for Executive Forum. She has a great deal of civic and community involvement, so we're very lucky to have Arlene here with us today. Hi, Arlene, welcome.
Hi, thank you for having me. I'm honored to be here. So you heard my history, and I've been proud to be working for Westar Bank for over 9.5 years. Our bank focuses on commercial real estate lending and C&I lending. Our specialty is within the construction lending for both owner-occupied and investor development. We also have a strong residential construction division for our home builders here in El Paso. Let me just give you a brief history of Westar. The history is that it was a history of two banks that merged. We had merged with First National Bank a few years ago, and F&B opened in 1920 during a turbulent time for rural bank and farmers. And then on the heel of the S&L crisis in the late 1980s, Westar opened up in 1990. We have 16 branches throughout El Paso and Fabens, and we have a branch in Las Cruces. We have total assets of $2.2 billion, comprised of $1.4 billion in loans, including the PPP loans that we did during this pandemic. We have a total of $1.6 billion. And one of the things that we are proud of, and quite frankly, the months of April and May were a blur for me. We did a total of 1,700 PPP loans, totaling $262 million, keeping 41,000 jobs here in the city of El Paso. So we're very proud of that. Year to date, we are profitable, but of course, as all our bankers know, that we don't know what we're going to be facing here over the next few months. And like all banks, we are building up our loan loss reserves along with managing the pressures of our interest rate margins. And so again, thank you. I'm happy to be here.
Thank you again, and welcome. Next, we have Yaisa Hallback, the Business Lending Manager for TFCU, and we have, I lost my screen here. Yaisa Hallback is a native of El Paso and a graduate of Urban High School. She holds both a bachelor's degree in communication and a master's degree in public administration from UTEP. She has worked in the financial industry for over 22 years, where she has experience working at both national and community banks. Over the last 16 years, she has worked with credit unions, helping to build their member business lending portfolios. She has held various positions throughout her career to include Senior Business Lending Officer, MBL Workout Officer, and currently leads the Business Lending Department at TFCU as a Business Lending Manager. She was awarded the El Paso District 2017 Financial Small Business Champion by the SBA, has been an advisory council member of the Women's Business Border Center with El Paso Hispanic Chamber of Commerce for the last several years. And she was also very involved in the El Paso community and loves doing outreach and serving people at the Rock Faith Center. She has been an active member of Alpha Kappa Alpha Sorority since 1998, and her most valued accomplishment is being a devoted wife to her husband, Eric Sr., and mother of her two beautiful children, daughter Yasmin and son, Eric II. Welcome, Yaisa. Thanks for joining us.
Good morning, everyone. Thank you, Memo, for the opportunity, and thank you, CCIM, for allowing me to be on the panel today. Always a great opportunity just to be amongst peers. As far as TFCU is concerned, I've been with this amazing financial institution for 7 years, and we are open for business. We're functioning well, profitable, thank God, during these really turbulent times. As far as TFCU is concerned, we started the credit union back in 1936. It was originally founded for teachers, but we opened up our charter, so anyone who lives, works, or worships in the El Paso County, we're able to facilitate. We no longer use El Paso Federal Teachers Credit Union. Our tagline is TFCU, just so the community knows we're open for all members. We have 9 branches throughout El Paso. We are excited to say we just opened our new virtual branch, I guess for lack of better words. The official name is TFCU Community Self-Service Branch. It's located on North Mesa at 2112, and it's touchless, which is pretty neat, especially during these turbulent times. So we are excited to be able to be open for business by way of that new branch. Our lobbies are closed. They'll remain closed for some time until we can kind of wrap our arms around the pandemic. But our drive-throughs are open. I'm able to assist members by appointment only. But luckily, we've been able to function well with all the inconsistencies of the pandemic. But TFCU is thriving. We're at 670 million as far as our asset size. We offer pretty much anything and everything as far as competitors are concerned. We have our residential branch, our consumer arm, any and everything related to banking services we're able to facilitate. I specifically lead the business lending department, so we're able to do loans as small as 25,000 and as large as 8.5 million. It's a gamut of things as far as our portfolio is concerned. Our primary function is real estate. We're doing construction and development lending, owner occupied, 1 to 4 family residential, investment properties. We do dabble a little bit in equipment financing, vehicle financing, lines of credit, account receivable financing, but we pretty much focus on real estate, but we're open to any and everything that's out there. We just started doing PPP loans. It's been an interesting ride. We're excited to be able to help the El Paso small business community. We just started last month and we'll be open for business as far as that's concerned until the deadline of August the 8th. You don't have to be a member to come in and inquire about the PPP loans, but of course we'll have to make you a member. We're excited to be able to facilitate and to help the community. As we all know, it's just day by day, volatile times, but we're excited to be able to be of service in any way possible. Our vision statement is to be your premier financial institution through trust, education, and excellent member service, stimulating personal enrichment and community economic development. So we live by our credo of people helping people. Everyone is important here. It doesn't matter, you know, the size of the loan. We're committed to helping in any way, fashion, or form. Again, super grateful for the opportunity and look forward to the Q&A session.
Awesome. Thank you, Yelitza. We're lucky to have you, and your clients are lucky to have you too.
Thank
Last
you.
but certainly not least is Albert Arellano, the Business Credit Administration Officer from GCU. As a native El Pasoan and graduate of Cathedral High School in '86, Viva la Cate, Albert. He's also a graduate of UTEP with an MBA and also a BA in both accounting and finance. He's been with GCU for over 16 years and has been the Business Credit Administration Officer of Business Services at GCU for the past 7 years. He began his career in banking with First City Texas Bank and over 28 years in financial institutions and has over 20 years in commercial lending. Albert, welcome and thank you for joining us. I'm not sure if we have Albert muted, but
I think he's not connected to the audio. Probably he called in, but
can you see if there's another way that we can identify him and mute him? Oliver, check your chat messages. Maybe if we get the phone number that he's calling in from, we can unmute him that way.
okay, yeah, he's unmuted.
Perfect. Hi, Albert, are you there? My apologies for the technical difficulties, everybody. Please bear with us. We'll get this resolved quickly.
Hello?
Albert?
Hello,
Yes.
Albert?
Yes. Yes.
We can hear you now. Thank you. Thank you for joining us.
Okay. Sorry about the technology problems here. GCU does not have Zoom. Y'all hear me?
Yes, we can hear you loud and clear. Thank you.
All right. I'll do this quick. GCU, thank you for the opportunity. As you all know, GCU has been a leader of a financial institution in the city of El Paso. We continue to do that and help out the community. Business, as far as commercial lending goes, man, it's been crazy the past couple of months, as everybody said in the past. But you know what? Our commercial lending, as you all know, just continues going. Real estate loans, owner-occupied, investment loans, construction loans, and land loans. Everything just keeps going as usual. There's a healthy pipeline there. And then you throw in the SBA PPP loans. Those have been pretty crazy. We've done over 750 loans for about 26, 27 million here for El Paso. And we continue to open up. All our branches are open. We're like 25 branches in the city. I know it's tough for everybody, but we continue to operate and help out our community. Thank you.
Awesome, Albert. Thank you. Thank you for joining us. Thank you all for being here. As you guys can tell from some of those introductions, from all those introductions, I mean, we've got an incredibly large wealth of information experience that's joining us today. And so we're going to try to go through a little quick fire round of questions, and then we'll have time for questions from the audience or from our guests. And hopefully we can add value to everybody's businesses. So the first question that we have is, can borrowers skip a payment on a monthly commercial loan? And so the way that I'll do this is that I'll call each of you panelists individually. You can give your reply and any other information that you think is relevant that question or that line of questioning. So again, first question, can borrowers skip a payment on a monthly commercial loan? Elizabeth, first up.
Well, right now, under the CARES Act, since my specialty is SBA loans, under the CARES Act, anybody who has an SBA loan has, the SBA has been making their payment from April until, April, May, June, July, August, September. So right now, the SBA is actually paying the payments for SBA loans. So that's the situation with SBA loans, and then the other bankers can talk about the other types of loans.
Those are some lucky borrowers. Thank you, Elizabeth. Jim.
Yes, we have worked with borrowers in terms of full principal and interest deferments. We've done 3 months starting out with, and certainly will consider more months if needed by that borrower. And then depending on the amount of interest accrual, we'll either add it to the note with a modification and then just amortize it out, or just allow the monthly payments once they resume to catch up the interest accrual. So we are doing that. We're also doing interest only for customers that do request it. So want to work with borrowers as needed, but we have done that. Thank you.
Great, Jim. And so just a follow-up question to that, Jim. Does that extend the term on some of those, the way that you end up working it out with the borrower?
Well, it may, or depending if you just re-amortize over the life of the remaining loan, it may increase the payments just a little bit. The interest accrual over that 3 to 4 months perhaps is an amount, but it's not a large amount typically, but it can extend it somewhat or maybe just increase the payment slightly.
Great. Good information. Arlene.
Yes, we also are helping our clients out. I mean, who would have thought that when we're underwriting loans that one of the risks would be a pandemic hitting our community like this. So we're there for our clients. Of course, we have under the 7A loans, the CARES Act, of course, the SBA takes care of those payments through October, but we are also working with our clients in terms of modifying the payments, deferring principal and interest, and at some, they just want to pay interest only. The same thing where we're looking at it at a 90-day interval. And I know certain clients that I've had, they need another 90 days because of the industry that they're in, and we're more than happy to help them with that. And the same thing is when we do the modification to the payments, we're tacking it to the end of the loan, or they can re-amortize it at some point in time.
Great. Thank you, Arlene. Yaisa, how are you guys handling the payments with your clients?
We're doing pretty much the same as Arlene and Jim. We were able to act very quickly once this unprecedented pandemic took place. We're actually allowing up to 4 months of deferred P&I payments. We've been very, very lucky, for a lack of better words, or our members have been resilient, and that's kudos to, underwriting, I guess, from initiation. A very small amount of our portfolio needed assistance, but those that needed it, we were able to act quickly, and we did modifications, again, allowing the 4 months of deferments. you know, only maybe one or two may need assistance past that, but we're adding the payments onto the end of the note. And again, allowing them that opportunity to kind of either catch up or just wrap their arms around it. So we are definitely in position to offer those deferred payments. It's funny, we had tons of people call in asking about Skip-a-Pay, and the Skip-a-Pay idea is a consumer idea, but the deferments are there for those members that are needing to or wanting to just pay interest only. We're open to that as well. But we're here, we're trying to ride this thing out with all of our businesses and, you know, taking it day by day.
Awesome. Good to hear. Albert, how are you guys doing at GCU?
Yeah, we're doing the same thing as you guys are doing, as Jim and the rest of the panel. We got the extensions where, of course, it just extends the members' term out as far as the original terms were. Usually 90 days. We can relook at it at the end of 90 days. There is a little bit of paperwork that needs to be done because, I mean, if it all involves real estate, you know, with all the real estate transactions and our title policies and our deed of trust and everything. So there is a little bit of modification, it's called modification, that we need to do and to prepare the extension of it. But yeah, we can prepare that for anybody. Hotel industry has been hit with some of those, apartment industry, you know, those are some of the typical that we've extended on.
Awesome. Good to hear. So it sounds like flexibility and solution-based kind of an approach to working with your clients is the way that everybody's handling it, which is great to hear. Things are hard enough as it is. Knowing that you have a lender in your corner, I'm sure makes a big difference for your customers. So great information. The next question that we have is the bank still doing PPP loans? And we'll start with Albert this time.
Yes, PPP loans, we're still doing PPP loans. Just got extended till August 8th. We have just call in our number and we'll take in the application. They're pretty easy as long as all the information is submitted by the borrower, the payroll information, and it's still doable till August 8th.
Awesome. Thank you. Yaisa, you're next.
Sure.
Yes, we are still actively taking PPP loans. As I mentioned, TFCU just started on June the 1st, but we're actively taking them all the way until the deadline.
Aline?
Yes, it's the
Doing
same
PPPs?
here. Yeah, for the PPP loans, the same here for Westar. I mean, there's still quite a bit of money left, stimulus money left, and so we are working with our clients and other customers or prospective clients to help them out.
And just to add this kind of to the question, is everybody extended to August 8th? Is that the date that everybody's working towards right now?
Yes.
Yes.
Yes, sir.
Yeah.
Yes, sir.
Okay.
Yes, sir.
Jim?
That's done by regulation.
Okay. Jim, so same answer
Yes,
for you,
yes.
still doing PPP loans?
We are, and as mentioned, the process right now is very smooth. Have the information, you can get your approval to fund from the SBA very quickly, and so we're continuing and look forward to continue until the date's up.
Awesome. Elizabeth, anything else to add? Yes.
No, nothing
Yes,
else
Albert.
to add.
Yeah, I just want to make a comment. A lot of the members maybe that are on the line right now might have gotten a PPP loan, and one of the biggest thing is going forward right now is this loan forgiveness application. That I'm pretty sure all the other bankers and ourselves, we're getting ready for that phase. But the holdup is the SBA. We don't know what to do with it once we get all that forgiveness information, and we can make a decision of it. But we don't know what to do with that from that point on. Do we need to submit it to the SBA? How are we going to get their approval? How do we get the money back? That's still pending out there. So just an FYI, if somebody of you all got a PPP loan out there, it originally started with you can use your PPP loan for 8 weeks. That got extended for up to 24 weeks now, and then your first payment, instead of being 6 months, could be up to now 15 months. So there's been some changes since we started back in March. Just an FYI.
No, that's a great comment. It's actually like you're looking at my list of questions because the next question that I had was regarding the SBA PPP loan forgiveness process, what is the latest guidance on the forgiveness piece of those loans? So,
Oh, my
so
bad.
you segued perfectly into there. No, that's great. Thank you.
You know, just to add real quick too, there's been a bill that has been introduced and don't know where the status, but hopefully it'll come to where it was proposed any PPP loans, $150,000 or less, it would be a very simple one-page application for the borrower for the forgiveness piece. So that's still out there. Many businesses and bankers, you know, we hope that that does come through. It would create a much more efficient process for the forgiveness. And so that's out there. The number I know is that 80% or more of the PPP loans that were done were below 150 and probably getting close to 4.8 million at least PPP loans have been done nationwide. So it's a large number that were done below $150,000.
Excellent information.
If I may chime in on,
Yes.
as a follow-up with to Jim's and Albert's questions. So right now there are two applications out there, an easy application and a longer form. And the longer forms are supposed to be for over 2 million, I believe. And then the easy form, I was looking at it to work on a file recently, and it's about a 3-page form. But like Jim, I kind of encourage everyone to sit tight a little bit because there may be an even easier process and, you know, pursuing the forgiveness, or, you know, using the forms that are out there right now. So like the other bankers are saying, that there's a lot of things we still don't know, and we're hoping that it's going to become a simpler process as the SBA works through the kinks.
So,
Patience is a virtue with this. Arlene?
yeah, so let me, I guess, piggyback on what everybody else is saying. You know, when we got involved with the PPP loans, we were able to get a team put together within our bank. And so with the amount of loans that we have, we decided to go ahead and get a software that we're going to have online in which our clients can go ahead and download the application and then upload it along with their supporting documents. And so some of our clients are really anxious, like we're ready to fill out the application, we're ready to submit it. And so we're communicating with them both verbally and through email. You know, go ahead and right now we're kind of like in the phase where we're having people do a trial run of it. And so we're sending them a link, and they're uploading and filling out the application and the supporting documentation. And then we have a quality review team that'll review it and make sure everything is correct, make sure that all of it is going to be forgiven. And like they were saying, then what we're going to do is just hold on to it until the SBA is ready to accept all the applications, and we don't know when that'll be.
Great info. Thank you, Arlene. Yeah, you said, do you have anything to add regarding the loan forgiveness process? I know you guys just got started in June with the PPP loans, but any other comments to add?
Just piggyback also, all of the lenders pretty much hit it on the head. As far as TFCU is concerned, once we started offering the PPP loans, it was my understanding that the members that we were servicing had the 24 weeks to utilize the funds. So I actually reached out to the local SBA rep here yesterday, just with that question at hand. How is that loan forgiveness going to work? Are we supposed to start now? Are we supposed to give them the applications now? And, you know, it's pretty open. The answer was very broad, very general. She basically just advised to wait till we get a little closer to the 24-week period. And, you know, yes, the information would be submitted to the respective financial institution who issued the loan. And we would have to do the due diligence as far as looking at the information, reviewing the information for accuracy prior to submitting it to the SBA. But I agree 100% with Elizabeth. I think the process is going to get even easier. And Jim, ideally, if you know, the easy application for those that are only requesting 150 and less, that would be ideal. Our portfolio is small, so you know, most of the loans that we've been able to do have been less than the 150. So I'm hoping it's even easier than that. But you know, it's a day-by-day thing. Being a new SBA lender as far as functionally using the CAF's E-Trans system. It's definitely been an eye-opener for me. Elizabeth, you are amazing. Anyone who actively does SBA loans, kudos to you. It's been an eye-opening, to say the least. So excited though to be able to be a part of that community and help.
Awesome. Thank you, Yesa. Albert, any other comments on the loan forgiveness piece?
Oh, we're just waiting to get on and get going.
Yes, sir. Moving on to the next question. Yes, go ahead, Arlene.
No, just
No,
to
go ahead.
chime in real, because I was anticipating this question. And so, and what Jim said with the easy form, of course, it's 150,000. And the other qualifications in order to submit or fill out the easy form, I've got some qualifications here that one of them is that the borrower is self-employed individual, independent contractor, or sole proprietor who had no employees at the time of the PPP loan application and did not include any employee salaries in the computation of average monthly payroll. That's the easy form. Also, if the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period, or the alternative payroll covered period. So those are some of the qualifications that if they've met those criteria, they can continue to move forward to fill out the form.
Okay.
And just real quick, just don't want to prolong it, but just on that, you know, the easy form, my understanding, does not have a dollar limit. So what I was referring to was a new bill that was introduced, and it's hopefully will go through where any loans under 150, it would be just a one-page simple online application. And so the easy form, in my understanding, doesn't have a dollar limit. You just have to meet those three criteria.
Right.
One of those three criteria in the easy form to use it. So just as an update.
We're hoping it gets passed. It will make everyone's life so much easier.
Yes.
We could all use any assistance we can in making our lives easier.
Yes.
Thank you for clarifying that, Jim. And good information, Arlene and Elizabeth. Thank you all. The next question is your bank doing commercial real estate loans, i.e. interim construction, as well as permanent loans? And we'll start with Yaisa on this one.
Yes, we're doing all of the above. We have a fairly large project out on the Far East that involves interim construction. We're excited to be able to have a product where we do a one-time close on C&D projects. So we're actively lending in that regard. Traditional real estate, yeah, that's pretty much the bulk of our portfolio. So yes, yes, and yes.
Arlene?
Yes, absolutely. We've got several loans in our pipeline right now that we're working on, both commercial and C&I loans. And so and of course our residential construction division for our home builders, it seems like as far as that's concerned with our home builders, that it's pretty strong right now. And so they're still coming and getting construction loans in that regard. So overall, we're still working on processing loans, absolutely.
And I think that's something that we've seen is that the residential side has stayed extremely busy during the pandemic. And just, I guess, a follow-up question before we move on to our next panelist. Are you guys seeing any changes in the way that you guys are structuring those loans, the way that you're putting the values together, your loans to values, et cetera, debt service coverage ratios, anything that's changing in regards to those loan types?
We pretty much are on the same track that we were prior to. We've always been pretty conservative as far as LTV is concerned. It's always going to be based on the strength of the borrower, you know, as it relates to construction and development, interim financing, you know, the strength of the borrower is what we're looking at. We have pulled back in some regards as it relates to industry type, not specific to construction development financing, but you know, if you're in one of the identified or designated industries that have been greatly affected by way of this pandemic, then yes, we're being a little more critical of a packet. But as far as debt service coverage ratios are concerned, no, we haven't changed in that regard. And, you know, we've been conservative to begin with, but we're just reviewing the packets as thoroughly as we would. I'm involving a few more eyes. All decisions are made here locally here at TFCU. And so my board and panel is a handful of people. So, you know, if I don't necessarily feel as confident about something because it relates specific to the pandemic, you know, we just involve another set of eyes, but we're open. We're not trying to make it harder than what it needs to be. But, you know, it's based on the credit packet though.
Lean, back to you.
I think, well, one of the things, obviously, I think that everybody is doing with their clients or somebody that's coming in to apply for a loan is just how has this COVID situation affected your business, affected your industry? What are you doing to in terms financially and just with your business to cope with this situation, and where do you see your business going with this? I mean, those are important questions that we're asking along with the overall, you know, underwriting that we do as well. So I think everybody is taking that into consideration.
Jim, how are you guys doing at Citizens?
No, we are doing the same. Investor real estate, construction, the permanent, owner occupied, certainly not to steal anything away from Elizabeth, and I'll let her go through more details, but we are an active 504 lender. So we can certainly look at that for the owner occupied projects. We also handle builder lines in El Paso, and so we're involved with that. Very fortunate to be. There's great homes that are being built. So from Citizen standpoint, we're looking at all, and we have projects in all of those different realms that are currently going on.
Great. Elizabeth?
Yes, so our focus is more so like the SBA 7A loan program. It's the guaranteed loan program. So, and my partner with Jim and some of the other bankers too, when, you know, things don't quite fit in my world, but we will do interim construction loans for, say, you know, whatever amount of time the contractor says it will take to complete the construction. Say it's a 6-month interim construction period. During that period, we do progress payments and charge interest only. And then after we have this lien waivers and the certificate of occupancy, it converts to a 25-year fully amortizing term and amortization SBA loan. But like the other bankers are saying, we are also asking, you know, hey, how's it going? How's it going with COVID-19? How's it affecting your business? We are seeing year-to-date financials that show that, you know, the loan cannot be repaid, and that's tough for us as bankers because sometimes we see fully strong debt service coverage for the last 3 years of tax returns. So we're trying to help the customers. We are trying to understand from the customers, you know, the dynamics of how COVID is affecting them year to date, and how are they going to live and be successful now with COVID as a variable in their business. And you know, in some cases we're waiting for, you know, the next month for July to see if we see the uptick and things turning around because we don't want to do a loan where maybe things aren't going to turn around for them, and then we've actually hurt them by loading them with debt that maybe they can't pay back because the COVID has really hurt them. So a lot of tough, we've been having to ask a lot of very hard questions, and for everyone's sake, the customer and the bank. So my 2 cents.
Hey, great. Thank you. Albert, how is GCU looking at commercial real estate loans, and have you guys seen a big change in the volume that you guys normally process?
Well, we haven't had much of a change in our debt service coverage ratio and all the other policies. It's just more like what Elizabeth says. We've been asking more about, has this pandemic, how has it affected your business? Yeah, 2019 might be a good year, but starting 2020 was when everybody's having issues. So 2019 will tell us if, yeah, you ended up in a positive or you ended up in a negative. And if you end up in a negative and then 2020 is in a negative, most likely you're going to be in the negative all year. So 2019 is kind of, it's like I said, it's history, but we're looking really at 2020. And that's probably one of the challenges for small businesses, that they don't have any profit and loss statements or being able to produce their own financial statements that is challenging for them when we ask them, well, let me look at your 6-month interim financials. And some like, I don't have it. I don't have an in-house accountant. I don't have a bookkeeper. And that's one of the things that they need to have in-house. They need to have an idea of how their business is growing and where they're at. Because we won't get a year-end statement for 2020 till 2021, 2-3 months after 2021, or a tax return. I mean, what the deadline's today for 2019, so it's kind of like worthless for the 2019 tax return being already kind of late. So yeah, we're looking more at, hey, how has your industry been affected by the pandemic? And then individually, how has this affected you individually? Because some apartment complexes are running great. You know, there's no issues with vacancies or non-payments. The biggest one is the hotel industry. They have been some issues there. But other than that, that's kind of a tough question that we're asking is how has this affected you? And then internally, we are doing a little bit tougher on us, what we call stress testing. You know, now we're going more into maybe 50% vacancies or maybe even 40% vacancies if you're talking about a strip center, you know, just to see how another pandemic would affect it. But yeah, that's kind of what we're doing.
Good information. The next question we have is what types of interest rates are available for the various types of products that you guys have? And we'll start with Arlene.
Yes, well, of course, we do fixed interest rates. We do adjustable, rates based on Wall Street Journal prime floating plus a certain spread over that for our lines of credit, obviously. And in terms of with regard to fixed interest rates, we look at the overall relationship with our borrower. We assess the interest rate based on, the deposits that they have here at the bank. There exist other existing facilities that they have here at the bank, but we are competitive. Our interest rates right now, they're pretty low. They're like in the high 3, low to mid 4 range, and we will fix them going out to depending on the maturity of the loan. Say like we have a loan that matures in 10 years, say with payments based on a 20-year amortization. Right now we'll adjust the rate between 5 to 7 years. It'll be fixed and then it'll adjust at that time.
Good information. Albert?
That's kind of like the magic number there. Everybody's asking for interest rates and everybody goes out shopping around. Like Arlene says, it's kind of like based on the product. Owner occupies, you probably will get the best rates somewhere in the mid 3s, low 4s. That's just because it's owner occupied. We think you're going to maintain your property. You're going to be there for a long time. Could be fixed up to 15 years fixed, 10-year fixed, no matter the term is. An investment property might be a little bit slighter higher because it's an investment property. There's a little bit more risk on that. Out of sight, out of mind. You're not there on sign on your property. But other than that, everything's just been competitive. And at the end of the day, is just having a good average rate for the borrower, because everything else has to make sense too, not just the interest rate. That's just one component of the whole deal.
Sure. Yeah, Isa, same question to you.
Pretty similar to the panels that's already spoken. The market is so volatile right now. On the commercial side, as you all know, it's not a posted rate or a stated rate. It's definitely not just based on credit score, but we're in the low 4s, depending on the product. As far as structure is concerned, we're super flexible, similar to Arlene. We can amortize. We can actually amortize out as far as 25 years if the package warrants that. We can fix up to 5 years, maybe 10 years, depending on the product, depending on the relationship. So it's really based on the credit packet, but relationship pricing is something that we look at as well. We don't have to, we can underwrite and evaluate a packet and determine a rate prior to an individual or a company becoming a member. Again, you'd have to become a member in order to be eligible for the loan, but we can underwrite a package to a non-member, but it's really just based on the deal, based on competition. It's very competitive right now. A lot of people are coming in thinking that the commercial area can grant rates as low as the mortgage rates. That's not the case, unfortunately. Mortgage rates are amazing right now from what I understand, but we're definitely realistic. We don't just use Wall Street Journal Prime as our base. We look at the constant maturity rate as well. So it's based on the packet, but we're competitive.
Awesome. Jim, Elizabeth, anything else to add regarding rates?
You know, just from the standpoint, from interim construction for a commercial project, we're typically going to be at prime floating at some spread over prime during that construction phase, and then convert it over to the permanent portion. And we can do that within the same note. And it just goes the 12, 18-month construction period, whatever we might be looking at, and then it'll fund right into and convert to that permanent portion. Probably we're going to be looking at a 5-year fixed rate and then adjusted every 5 years. We've got to remember prime at 3.25 right now, and latter part of 19, it was probably, I think, at 5.75, went down very quickly because of the pandemic, which was certainly needed. And it was pushed down. We just, as bankers, need to be cognizant that what are rates going to be in the future and try to predict that. So we do take that into consideration when we do fix that rate for 5 years. And again, somewhere in the mid 4s to 5% fixed for a period of time is still a very good rate. I will make a pitch for the SBA's 504 loan program. Remember that 40% debenture, right now it's in the 2.6 range, fixed for 20 to 25 years. So for owner occupied products, that's still, it's very much a good program if you do have an owner occupied and you're looking for an overall good product with typically 10% down towards the project, the debenture at a 2.5, 2.6 fixed rate, and then the 50% with the bank. So just want to throw that out in terms of owner occupied loans. But again, a good time right now for rates. As bankers, though, we just have to be cautious as to how quickly they went down. They can certainly, when the economy does start coming back, they would probably start going back up at that point.
Elizabeth, any other comments on rates?
Yeah, just to chime in and piggyback on Jim and Albert and the bankers, you know, it truly is, like with us, our rate is one, like Albert was saying, rate is just one component of all of the variables of a loan. We might do 100% financing. We might fund working capital and equipment where our loan to value, where we have a collateral shortfall. So, but we're able to help the business expand their business and move forward. And in a situation like that, that's not a fixed rate deal. It's just not, you know, but it helps get the customer project done. It helps them, you know, start do whatever it is they're wanting to do, expand their business. And with the SBA 7A loan program, there is only a 3-year prepayment penalty, and you know they can later on refinance the loan at that time. But I mean, our rates are based on Wall Street Journal Prime plus, you know, the maximum anybody can charge on an SBA loan is 275 over prime. But you know, their interest rate is just one component of the various components of a loan. And with us, we are not required. I mean, we don't require them to move their banking relationships, and we're just trying to put the best loan together that we can for our customer and taking all variables into consideration. I just want to say all that. Thank you.
Perfect. No, great information. Thank you, Elizabeth. Next question that we have for the panel is, what types of structures are available for investor real estate loans as well as owner-occupied loans? And we'll start this one with Mr. Easley.
Well, again, I'll for the owner-occupied piece, we can do them direct. And we typically would look at a 75%, perhaps 80% loan to value would be our typical structure on that. Up to a 20-year amortization, maybe a 5-year to 10-year maturity on the loan, adjust the rate every 3 to 5 years would be some possible structures. Using the 504 for the owner occupied, that debenture piece again is going to be fixed for a full 20 to 25 years, and equipment can be included in that. for the project cost. And then the bank, its minimum maturity has to be 10 years. So we would do that and then adjust the rate again every 3-5 years, something like that. So a good terms, they haven't really changed much from that 75 to 80% loan to value maximum for both the investor properties and for the owner occupied properties.
Elizabeth.
Yes, sir. So our, on our, again, I'm mainly an owner occupied real estate lender. And so the 10% down of whatever the total project cost is what we would like to get into our loan. And that can be, so the project can include equipment, real estate, working capital, and whatever the whole thing costs, it's 10% of that total project cost. And in some cases we can go down to 5%, and in some cases we can do 100% financing. So it just depends on the loan request and on the file.
Great. Yeah, Isa?
We're open to both owner occupied and investment properties. We can go up to 80% loan to value. We like to see 75, but we can go up to 80% depending on the collateral. As far as terms are concerned, we can amortize out to 25 years. Our maximum term per NCUA is 15 years, so we can do the term anywhere from 5 to 15. Our rates typically adjust every 5 years. And, we're open again, as I mentioned, to owner occupied and investment. So pretty similar to that of those on the panel.
Oh. Albert, what are you guys looking at structure-wise for investor deals or owner-occupied deals?
Well, credit unions are a little bit different, but I mean, we're all around the ballpark, 75, 80% loan to value and the collateral. Like Aisa mentioned, our max term for credit unions is 15 years term, but we can do an ammo 20, 25 years amortization. All that means is there's going to be a balloon at the end of the 15 years. The good thing is credit unions don't have a prepayment penalty. So that helps out a lot of members that they want to prepay the loan early. But what I wanted to say is I know we're all very similar on our products and everything, but it's more from the buyer point of view is they need to get educated as to what rate they want. They need to be educated as to what rate, what Wall Street prime is out there and what the history of it going up and down and what could be the current rate that they're looking at. They having an idea. Interest rates are negotiable between us and the borrower. So at the end of the day, yeah, we're going to take into consideration a lot of other things, and the interest rate is just one part of it. But if the borrower is very familiar and gets familiar with all the types of tools, repricing the loan every 3 years, every 5 years, every 7 years, a balloon in 5 years, a balloon in 10 years, fixed for 15. If they get educated in that, that just helps out the lender. Like, hey, this is an educated borrower. They know what they're talking about. So it's just one part of it, the interest rate.
Great info, Albert. Lean, anything to add related to the structures for investor deals?
Yeah, so here at Westar, we do, of course, we do the conventional lending for investor real estate. We will do up to, 75% loan to value, 5 to 10 year maturity. We could do 20-year amortization, and in some cases, based on the deal, we can go up to 25 years on a case-by-case basis. And of course, like I had mentioned before, the interest rate is based on the overall relationship, and that it'll typically adjust between 5 to 7 years. And in terms of owner-occupied, we've done, as far as conventional, just depending on the strength of the borrower, we'll do up to 80, sometimes 85%, depending, like I said, on the strength of the borrower, with a 10-year maturity, with payments based up to a 25-year amortization in some cases, but normally it's 20. We do several 504 loans. We've done several here at the bank, and so same kind of structure on our side. And as Jim said, it's a good time right now to be looking at a 504 loan. I've also done 7A real estate loans as well. So it's a good time in terms of 504 loans to look at what you can do right now. And in terms of equipment loans, we'll do up to 5 to 7 years, depending on what type of equipment, and it's usually up to 80%.
Great info. Thank you, Arlene. So we've only got a couple more questions to go. I'm going to go ahead and ask them at the same time, and then we can go through the list of the panelists. And I also just wanted to mention, I got a note here in the chat that's from Steve Beltran from Home Mortgage that says, on the multifamily side, rates on a non-recourse 10-year fixed agency loan, i.e. Fannie Mae or Freddie Mac, can get to the high 2 to low 3% range with a 30-year amortization and a 55 to 80% LTV permanent financing. So I just want to throw that out there, and you guys can comment on that if you guys have any knowledge on that. And then the last two questions to address are, what types of rates are available for residential mortgage loans? And secondly, when will the bank lobby be opened, if you guys know? And we can start off with Arlene on this one.
Well, as far as residential mortgages, we don't have a residential mortgage division, so I can't talk to what the rates are. I mean, overall in the industry, obviously, there's really competitive rates going on right now in that regard. As far as the lobby, we did open it. Originally, it was like, by appointment only, and it was closed. And then we opened it, but given what's going on here in El Paso, it's back down to appointment only. So.
Thank you. Albert, same questions for you.
Well, I don't have a current mortgage interest rate, but it should be probably around 3%, 3.25%, around that area. Purchase and mortgage, regular residential home. Our lobbies are open, have remained open throughout the pandemic. We got 25 branches around town, so still open, all doing business.
And is that by appointment only, Albert, or how are you guys handling the flow of customers into the branches?
Well, the branches know that you can walk in, and our video lenders or video tellers are available.
Okay.
You can also make appointments, and they can be done over the phone also. That goes for business loans and mortgage loans and consumer loans. So.
Great, Albert. Thank you. Yaisa?
Our lobbies are closed and will remain closed until we can get a better understanding of the pandemic. As Arlene mentioned, the numbers are rising, and so our CEO is adamant about ensuring the health and well-being of not only our team members, but our members at large in the El Paso community. I am by appointment only. I really didn't know what Zoom was before the pandemic, and now it's a household name. It's a household phenomenon. So we're doing a lot of, a lot of everything that we do is online. It's via the phone, via the internet, via email. I'm working remotely. I spend a couple of days in the office, but the other days I'm remote. So a lot of our staff have gone to that. Again, our CEO is adamant about our health and well-being, but we're open for business. I mean, we are able to do most of what we were doing via remote. Obviously for loan closings that are happening at the title companies. As a lender, I've always prided myself in attending those closings. Due to the pandemic, I haven't been able to do that, but we've been able to get deals still done with the credit unions. With the title companies. Kudos to all the title companies that are on the line. But our lobbies are closed. Not sure when they're open, but we're able to function. Our drive-throughs are busier than ever. And for those that I'm needing to meet with in person, I am able to do so via appointment only. As far as interest rates, TFCU has a thriving mortgage lending division. I don't have the exact rates, but I can share with you that we are able to offer rates in the high 2s. It's also going to depend on if it's first or secondary market, and it's also going to depend on the term. The shorter the term, the lower the interest rate. So low 2s is what I've last heard, but they're super competitive, and the rule of thumb is if you're able to reduce your interest rate by 1 full basis point, it's worthwhile with regards to refinancing. But we're doing purchases and home equity, so we have a thriving division here at TFCU as far as residential lending is concerned.
Great, Yaisa. Thank you. Yeah, and great point on the Zoom, right? I think very few of us were familiar with this technology at all, and it seems like, yeah. hopefully we're getting better and better with it, right? And we're
I
not.
hope so. I just
Hopefully
got a
that learning
Surface
curve is
Pro that
50.
lets me come up. I know I've been attending the CRA meetings weekly, and all you would see is my name, but hey, we're moving and thriving.
There you go. Elizabeth, same questions for you. And I guess I'd just like to add, if there's any changes that the bank or your institutions have implemented during this time that you think will continue after the pandemic, whether it's efficiencies and how you guys are doing things, processing loans, et cetera, chime in on that also. So Elizabeth?
Okay, sure. So we don't have a residential lending division, and I'm the loan officer here for Coastal States Bank. So we don't have a lobby, but I am still meeting with my clients on a case-by-case basis in person. But customers, I think they understand that, we're in a pandemic. So they've been, we've been doing a lot of things through technology and, through secure emails, sending financial information back and forth. And like Mia is saying, using the Zoom and FaceTime on, cell phones and whatnot has also been an option. I think this will continue
Awesome.
after the pandemic. I think these new ways of doing business, I think they will continue. That's just my 2 cents.
I agree.
It's like a little bit actually adds efficiencies to it, And I
Yes.
think we're always looking for efficiencies. Jim, any comments regarding all that?
Yes, for our lobbies, the earliest we're looking at opening would be July 31st, but just a moving target. We've, like everybody, have had different dates, and we continue to push them up past the date. So we're still looking at that. Mortgage rates are what they've been discussed, probably in the 15 years, 275, 250, 30 years, low threes. We do have an active residential mortgage lender here in El Paso, and he can look at purchases, cash refis, cash outs, and refinances. So all the different type of mortgage loans there. And, in terms of operating, I've gotten to know the drive up very well in terms of getting documents and being able to visit with customers through the drive through. So that's worked out well. PPP loans, what we've done on that is we send the loan documents email, and they just send them back email with the signatures, and that's what we've used. So that's been a big help because, again, with the volume that all of us have done with PPP loans, it would be a lot of customer contact, but we've decided, like probably everybody on those, just to accept the emailed signed version of the loan documents to be able to fund.
Excellent information. Yeah, I guess we all have to stay flexible, right? We all want answers as to when things are going to open or when we can do some of the things that we're used to doing, but flexibility is the only way that we're going to survive this pandemic. That's all the questions that we had. Yes, go ahead.
I'm sorry. I just want to throw out there for those that may be on the call with regards to our appointments. We are having to take temperatures. You do have to have a mask on if you do come into the lobby. Again, we are by appointment only, but we were a little more lax in the beginning, but now if I have a member coming in that we're going to sign off on a PPP loan or, whatever the purpose of the meeting will be, I do have to take your temperature, and you will have to have a mask coming in. I pray that that's not the norm going forward, but as far as technology being used and streamlining things, we're definitely open to it. We have a third of our employee base that are working at home remotely. So I think that was definitely something that we never thought we'd entertain and we may keep in place, but just wanted to put that out there. Please have your mask and be prepared to have your temperature taken if you come and see me.
Great point, Yesa. Thank you for that. On a personal note, I hope that everybody's gotten over their hesitation for mask wearing. And hopefully if we can get more buy-in, we can really make a difference on how this thing's going to turn out. So great points. Thank you, Yesa. So we do have some questions from the guests here. But before we get to that, we'll jump right into that. So I have one question here from Jorge Nieves saying that currently there's a surplus of buyers looking for land. What can lenders offer besides taking the clients to a hard money lender? And this is open season, so anybody that's got some comments, just go ahead and start talking.
We definitely entertain land financing, Jorge. The parameters are a little different as it relates to LTV. It's going to depend on if the land is raw or developed. The interest rates are higher, obviously. on non-income producing, but TFCU actively does land financing.
Yes, and from
Nice.
Citizens Bank standpoint, we'll also do land financing, probably 65 to 70% loan to values is where we're going to be at. We can entertain interest monthly on that if there's a visit about maybe the construction project going forward at some period in the future, maybe a year, 18 months. So if a borrower is looking to obtain the land and then have a little bit of a delay on the construction project, we can still entertain that with an interest monthly perhaps, and then just roll it into when the total construction project loan goes into place.
That's the
So in
same
essence, you would
thing.
go land, construction to perm?
Yes.
Jim, on that?
It could
Okay.
be if we know if the borrower is already, hey, maybe this is the land I want. I don't want it to be sold. Let's do that land loan up front. That equity that they put towards the land could be used as equity towards the overall project then also. And then just convert it perhaps to the construction loan and then to the permanent. A lot of different ways to do that structure.
Awesome. Good info. Arlene, you were saying?
No, that's the same thing here at Westar. We do, of course, we do land loans, again, with regard to the loan to value between 65 to 75%. And again, the same thing, if there's going to be a project that's going to be constructed within a year, we will work with them on that and do interest only monthly, at which time we can actually work on getting it structured to where it's a land loan for a certain period of months and then to convert into a construction loan and then upon converting into a permanent loan.
Yeah.
Awesome.
Same
Albert,
thing for
Elizabeth?
GCU.
Yeah, I'll chime in.
Yeah,
So,
same thing for,
oh, go ahead, Albert.
go ahead.
Go ahead.
Okay.
Yeah, go ahead, Albert.
Same thing for sure. Same thing for GCU, raw land development, same ratio, 65 up to 75%. And we can do the same thing as far as if it's going to be used into construction within a 2-3 years period, and go use a 5-4 program in the meantime. All that is doable. So yeah, land loans at GCU, we do participate in them.
Great. Elizabeth?
Okay, so with the program, we can fund land if it's part of a larger construction project. So if somebody wants to buy land, they have to, because again, I'm an SBA lender, the SBA doesn't want the customer to buy an asset unless they know that they're going to be able to use it for their business. So that being said, they have to have a plan for the land, where the construction plan, plans and specs, how many square feet are you going to build onto the land and whatnot. So we can go into underwriting with the real estate contract for the land, but we will need like a sketch of what they want to build, a construction budget, and then we can get everything approved. And then we will order an as-is appraisal and an as-complete appraisal based on the plans and specs, but we cannot close until they have a building permit ready to start construction. So as soon as we close, we pay the land off, and we immediately start funding the interim construction over however many months, and then convert it to permanent financing for 25 years. I know that's not popular, with the land sellers, that a lot of them are understandably have the thought of what it is not my concern what the buyer wants to do with the land, but it is a very good a good program if the customer can roll everything into one loan long term. And I just feel that if we're just real honest with the sellers up front and tell them this is the program, this is what's required, can you please give us the time that we need to get plans and specs done and permitting, especially if they have a viable buyer, then that helps, and it avoids 2 closings and all that. But sometimes when that patience is not there, which is understandable from the seller, then I'll partner with some of my other banker friends and say, hey, you want to do a land loan? And then, when we're ready, if it's okay, I'll pay you off and I'll do the long-term loan. And it's just a collaboration to try and make everyone happy best that we can.
Awesome. Good information, Elizabeth. Thank you. Thank you for the question, Jorge. If you guys have any other questions, you guys can unmute yourselves and just say it out loud, or if you don't feel comfortable, you can also type it in the chat box. I also forgot earlier in the presentation today, guys, in the meeting, to ask you guys to fill out a poll. We have a poll to see if this time actually worked well for you guys. Usually when we do our luncheon meetings, it's obviously during lunch, so it's 11:45 to 1:30 kind of a time frame. So Miguel just sent you guys a little poll here through Zoom. So if you have a quick second, just answer some quick questions. That'll help us as we plan more of these and continue to look for ways to add value to you guys as members. It'll make it to where we can make it as convenient as we can for you guys. Always thinking about what's easiest for you all. So do we have any other questions or any other comments from the panel, that something that we didn't ask you that you think is relevant that the membership should know about?
Memo, can I say one more thing on the construction, on the land loans? So one thing one final comment is that if we're able to get everyone on board on the, purchase the land and then build, provide the plans and specs for the construction, whatever, because Jorge's question was, what is the loan to value? So if we are able to put that entire package together, then it's 10% of the total project cost, including the land. So that can be, again, a higher leverage, all-in deal, not, just a percentage on the land. It's still, if we could get everyone on the same page, it would be the 10% of the total project cost. Just want to say that. Thank you.
Good info. Thank you. Do we have any other questions or any other comments from our panelists?
Thank you for the opportunity.
Thank you.
Thank you guys. I appreciate everybody who was able to join us today. Thank you for our panel for sharing your invaluable experience and knowledge regarding all of these things. And a couple of closing announcements. Just wanted to let you guys know that your board of directors and the local chapter is working on a couple of things that you'll be seeing here in the next month or so. We will have a virtual deal making session next month, so look out for that email that should be hitting your inbox soon. And then we are also working on something to give back to our community. Obviously, we all know and understand that the needs in our community are as great as they've ever been. And so we found a couple of things that the board is really passionate about. And so we're going to be doing a blood drive with Vitalant Blood Bank to try to raise just blood for all the medical needs that are out there. Obviously, people that have tested positive for the antibodies, that blood is extra valuable because they could also start using that for treatments and for research purposes. And so we will be doing a blood drive, and we are looking for a matching sponsor. We will be donating funds to the Kelly Memorial Food Bank, as well as creating some volunteer opportunities. And so we think that both the food banks and the blood banks right now are two things that are not political, that we can all get behind, and that we can really make a difference in our local community. And so, again, just really grateful for everybody making time today to be here with us. Hope that you found this information helpful. And if you have any questions about membership or anything else that CCIM can do to help you in your quest to improve your business or your education, please reach out to elpasocicim@gmail.com or myself, again, Memo Sotomayor. And my phone number is 929-4765. Thank you guys for your feedback on the polls. It looks like the morning is the most preferred time, so we'll probably look to schedule these future events probably at around the same time. So again, thank you to all of our panelists. Hope you guys stay safe and healthy. Enjoy the rest of the week. Stay productive, and God bless you all.
Thank you.
Just to remind everyone, check Border CIE. Check it out and support your local commercial MLS systems. Call me if you have any questions, or Victoria Talavera at the board. We can get you through this and show you what we have.
Absolutely. Thank you to Sergio and the whole Border CIE board of directors for your support, and for, most importantly, for putting Border CIE together. It's something that we need. We don't need to be paying ridiculously high charges to some company that has nothing to do with our market, as we've both been forced to do in the past. So thank you for bringing a solution that we can really own and appreciate here locally, Sergio. Thank you to everything that you guys are doing.
Thank you.
Thank you.
Thank you.
Have a good one, guys.
Have a good day.
Everyone.
Thank you,
Be
guys.
well.
Thank
Bye,
you.
thank you.